everybody. Welcome to Deep Dive. I'm your host, Chip Anderson. You probably just saw me on the previous show, but I'm here again, and I'm now live working with my good friend, Rachel. We're going to be showing you the in-depth features of StockCharts in this show. I really, really love this show. It lets me dive into some really important areas of the website that I don't normally get to talk about in the overview shows. So today's topic is using momentum and relative strength to find the best stocks for you. So we're going to talk about how StockCharts.com can be used to find stocks that you might want to actually invest in, you might want to buy, and then show you why those stocks will be interesting to you and how you can take your criteria and kind of put it into the StockCharts system so the StockCharts will automatically find those stocks for you. Again, just got a couple of FAQs about this show. It's the same as always. We are recording this. You can go find it up on YouTube soon after the show is over. But right now the show is live. So we have the little Slido chat box that's out and available to the right side of the video. And you can use that to talk to us during the show. In fact, we'd love to hear from you. Like I said, I have my good friend Rachel with me. If you'd like to, please type a little hello message to Rachel in that box. But as I'm talking, let me know if you have any questions. If there's something that I kind of glossed over or went too quickly on, absolutely. I would love to be able to answer that show during the hour that we have together. Do keep in mind that I have to stay on topic. I know there's like a zillion things in StockCharts we could talk about, but in this case, make sure that the question has to do with the topic that I'm presenting today. And then the slides that I'm showing you right now on the screen, I've created a PDF file for that, and you can download that PDF file if you want. There's the URL. I know the numbers are a little tricky here. It's a deep dive, all lowercase, 20 for 2020, 01 for January, and 11 for January 11th. So that's what the numbers mean, and I think you'll be able to type all that in and download that PDF file. You can do that right now and follow along, or you can do it after the show just to see what's going on. So again, during this show today, I want to really talk to you about the technical investing process. Technical analysis is about helping you find opportunities that really are tailor-made for you and that not necessarily anybody else is talking about. And the key thing here, the thing we're going to be using a lot today, is the scanning engine. It's going to help you find stuff that nobody else knows about. And that's going to be some very valuable stuff. So think about that. The goal as an investor, especially a technical investor, is to sort through the 100K or plus, however many ticker symbols it is that we have these days in our database, and find the small number, maybe 5, maybe 10, maybe 1 or 2, that you might actually pull the trigger on. So this is especially true for somebody who's sitting in cash. Obviously, if you already have your money invested, then this is not for that. This is for the situation where you've taken some profits, you have some money, you want to get back into the market. Which stock do you want to play? The stock market is like a casino with 100,000 different machines, 100,000 different games going on. So we want to get you connected up with the one that is most likely or most compatible with you in your investing style, let's say. And remember, scanning is all about the right edge of the chart. It's all about finding the technical setups that you think increase your odds of investing success. And I'll add to that sentence, to finding those things right now as of the current moment in time. And so let's talk a little more about some of those terms that I used in that particular phrase. So what is a technical setup specifically? So a setup is a collection of technical signals that will occur before you are willing to buy a stock. Remember, when I say technical signals, I'm using the technical term for technical, which means these are signals that have just to do with price, looking at the price and the volume and the price history and the volume history of the stock. So there may be some calculations that are done on price and volume, but the bottom line is price and volume are the only bits of input that kind of go into these signals. And so they're very kind of unopinionated. They're just looking at the numbers and that's all. They're applying the calculations and giving you advice based on those calculations. So technical signals don't have a lot of bias one way or the other. Instead, they're giving you information that you want to then be able to use to narrow down your choices. And a technical setup is a collection of those signals. Now, and to be specific, a signal is when on the technical chart something crosses something else. When you have two lines and they're crossing either above or below each other, maybe something's crossing the zero line, maybe something's crossing the price that you bought it at. Those kind of things are technical signals. And as an example, and this is a very, very simple example, technical setups, as I'll show you, are a little more complex than this, a lot more complex than this. But simply, maybe you only buy stocks that are priced between $10 and $100 and that have an RSI, a technical indicator called the RSI, value that has just climbed above 30. So this would be somebody who's just looking at a single technical signal for stocks in a particular range. Again, that's very simple, but that is a setup. That absolutely is a setup. Now, the thing about setups is there's no perfect setup that I can give you. Setups they're very personal, and they're also about building trust. You have to believe in the setup, and you have to customize the setup to fit your particular approach. And what works for one person may not work for somebody else. Your trading goals, your ability to tolerate risk, the amount of money you have in your account, the amount of experience you have looking at charts and dealing with different indicators and familiarity with those indicators, the amount of time you have to monitor all this stuff, that varies greatly from one investor to the next. Obviously, some people are doing this for a living. They're doing every day. They're watching the market like a hawk. They're going to be using very, very different setups than somebody who maybe only looks at it each evening or maybe only looks at it during the weekends. So, and again, all those other factors come into play. So it's very, very difficult to say that the perfect setup for one person is going to be the same, work just as well for a different person. And so we believe that you want to be customizing heavily these setups. They're going to be developed using trial and error. This is a process. It's not a goal that's easily attained. It's a process. And in fact, it's a process that never ends. You're going to be constantly tweaking, updating, and changing these setups as the market changes. So the idea is you start relatively simply with a simple setup. We're going to talk about some of that today, and I'm going to give you some ideas for creating some starting points. And then you're going to, through trial and error and iteration, you're going to improve those results. You're going to see if they really do give you what you want, and then you're going to continually watch them and try and make them better. Remembering, of course, that they'll never be perfect, first point. Second point is there are no black boxes. We believe strongly that a human needs to be involved in making the final decision on all this stuff. Automated trading systems, maybe they're coming, but in terms of an average investor, that's really not going to be the right way for you to go because you just don't have the expertise required. And even so, black boxes are always going to be challenging. We think it's much, much better to have a system that gives you a small number of stocks for you to review, and then you make the final decision on what to buy, when to sell. So reviewing the results, we think is super important. All right, a bunch of those soapboxes. I want to make sure I get all those out of the way, but they are important. So the next question is, what are we looking for? And this is super important. What kind of chart, what kind of price action should a stock that you're willing to pull the trigger on have beforehand? And what's important to understand here, a couple important things. One is that there's no way that anybody will pull the trigger right when a stock turns. The ability to pick a bottom on a stock exactly is really, really, really difficult, clearly. And most of the time, if you pick the exact bottom, that's just going to be pure luck. What a lot of people generally are shooting for is finding a situation where something has recently turned around and has a good chance of continuing to go higher. But the point is, in order for you to buy a stock that's a recent turnaround and is going to move higher, you have to start by seeing a chart that looks like this. And many people, especially people that are new to charting, you might look at a chart like this and go, I will never in a million years buy this stock. This looks terrible. This stock has been breaking down. All the indicators have sell signals on them. Really, really not looking very positive. I will, however, note that there is a positive technical signal here on this chart. Now, normally you're going to be using more than one signal. I'm trying to simplify my presentation today, so I'm only going to be showing you stuff with fairly simple signals, but do recognize that in the real world there'll be more than just the one. But anyway, this is the RSI indicator. We'll get into it in more detail in just a second. And notice that it is crossed above 30. So the day before it was below 30, and in fact it had been below 30 on this chart all the way back to December, as you can see. But on this particular day, it has moved above 30, giving potentially a technical signal. And so there's some reason, a little reason for hope. Honestly, you probably want to look for a little more before you'd actually pull the trigger. And I have clearly picked that particular stock for a reason, kind of in hindsight. I'll show you the result in just a second. But I just wanted to get you started to get you thinking about that particular chart. Before I go and show you the actual what really happened with that stock, let's talk for a second about the RSI. It's one of many technical indicators that we have on StockCharts.com. It is one of the more popular ones. It's kind of one of our default indicators. If you don't configure your account differently, you will see the RSI in most of your charts. The name is the Relative Strength Index, but that is misleading. It's relative strength is a term that's usually used when you're comparing one stock to a whole group of stocks or to other stocks. In this case, relative strength isn't meaning comparing it to other stocks. It means it's comparing it to itself just in the past. So this was, when it was created by a very famous technician named Wells Wilder. He basically wanted to come up with something that would give you a sense of whether the stock was improving relative to its past performance. And so he called it the RSI. But again, since then, the relative strength term has been used for other stuff, and so the name can be a little confusing. It is a bounded oscillator, meaning that it goes back and forth, up and down, and it will do that a lot. But it is bounded, meaning it can have values that are only between 0 and 100. It can never go above 100. It can never go below 0. And in fact, in order for it to get anywhere between, say, 95 and 100, the stock has to do some really kind of crazy things, and same for between 5 and 0. Most of the time, a stock will spend its time with an RSI value that's between 70 and 30. If it goes above 70, that's considered to be overbought. And if it goes below 30, that's considered to be oversold. Those are, again, fuzzy terms. They're not specific terms per se, and those levels could change. The levels 70 and 30 were picked by Wells Wilder when he designed the indicator, but some people want to use 25 and 75 or other things, and those are completely fine. But 70 and 30 are the normal standard levels. And then finally, the indicator itself takes a single parameter, which is the number of periods. It's the look back, the number of days on a daily chart, or the number of hours on an hourly chart, so on and so forth, that are used in the calculation. When Wells Wilder developed the indicator and presented it, he used 14, and that has become the default value for the parameter, but it doesn't have to be that. It can be anything else. I have talked about in previous episodes about how you can use something called the ribbon technique to learn if there's a better value for you. Maybe you can go back and find those in some of the archives. But for the rest of this, we will just use 14. I'm not gonna muck with that. We're gonna use 14 for the rest of this show. So let's go back to our chart. And here's what happened back when I first presented this. I actually presented this chart back in an older show that I did back in 2015, I think, 2016. But it was, and you can see during that time, the chart had, after turning around and giving that signal, things continued to improve for this particular stock, and it was up almost 35% at that point. And I went back just the other day and looked again at that entire situation. It ended up moving up 70% from its absolute low. And then later it moved up to 100%. It regained everything it lost in that deep dive back in December. And for anybody who was able to recognize this move and ride this move, that's great. That's exactly what a technical investor is trying to find. It's not easy, clearly, and you can even on this chart, there were ups and downs. You would have had to have some staying power to stay in the stock during that kind of wild ride. And you would have had to known to get out there in May, because if you expanded this chart further, you would see that the stock moved lower, in fact, much lower after this period of time. But again, a technical investor is looking for situations where a stock is going to go up. They'll ride that until that particular move becomes weaker, and then they will look to get out. And so this is the kind of moves that a technical investor is looking for and hopefully can ride. As I mentioned, this is a deliberately simplistic example. I'm not here, and please don't get the message from me that the RSI is the only indicator you need to do, and you just need to buy when it crosses above 30. I'm using this as a very simple example. That advice would usually be very bad advice. But again, we can now see this is an example of a technical setup, and how that particular technical setup, if we'd found it at the right time and traded it properly, we could have made a nice bit of profit. So let's now think about more technical setups. So again, I'll just one more time. In order to ride those trends higher, you have to be willing to pull the trigger when the chart looks like this. Not necessarily when the chart, has already gone up a bunch. So that can be very challenging. Anyway, so again, the bigger question, looking at the bigger question again, is when you think you have a setup, when you think you are interested, when you find some technical signals that are interesting and you want to make them into a setup, you have to think about, well, okay, what other stocks meet that same technical criteria, and are all of them going to then behave in a way that would be profitable? Or is it just this one stock behaved this way and all the other stocks with that signal didn't? So in this case, we were looking again at the RSI moving from below 30 to above 30 after it was below 30 for quote unquote a while. And so let's talk about that, and let's turn that into something that the scan engine, that our StockCharts account can use. So just breaking that down a little more, and this process of breaking down something you see visually into something that you can describe to the scan engine, this is a skill you need to develop. So in other words, what we're saying is we want a situation where we want to see any chart where the RSI value for today, right now, is greater than 30, but also where the RSI value for the previous 3 days was less than 30, and 3 is arbitrary. You could make that 5, you could make it 10, however many you want to do. The more days, obviously, the fewer results you're going to get back. So, and that in turn breaks down into two statements that we can now turn into and give to our scan engine. Today's RSI with the parameter 14 greater than 30, that and greater than sign 30, and starting yesterday, the maximum for the previous 3 days of the RSI was less than 30. So in other words, look at the previous 3 days, starting yesterday and going the day before and the day before that. Get the RSI values from each of those 3 days, find the largest RSI value of those 3 days. And if the largest RSI value of those 3 days is still below 30, that means that the RSI itself has been below 30 for all 3 of those days. And that's exactly what we're looking for. Hopefully that makes sense. We have other shows about scanning and trying to, and all the specifics of scanning. Plus I'm going to give a demo here, in fact, in just a second. But it's a very, very common, this is a very common kind of scan, so I want to make sure you're very you're familiar with it and you're kind of comfortable with how I use that. It's important that the word yesterday appear in front of max so that we're not including today's value in that calculation. Anyway, so let's actually do that. I think I've got a demo right now. Yep, I'm going to switch over to my browser and I've logged into my account. Here's my StockCharts account. And I have the ability now to go to our advanced scan workbenches. I'm on the members dashboard, and the easiest way to get the advanced scan workbench is just over here on the left. I'm going to click on it. I could also click on new scan right down here, the button here, either way. And this is our advanced scan workbench. Last year we made some nice improvements to it, so it's much easier to type scan instructions into this. I know scan instructions can initially appear a little kind of intimidating, but it's something that that is not too difficult, and I'm going to try again to help you with that today. So we already have two clauses in here. Type is stock, and SMA, the simple moving average of volume for the past 20 days is greater than 40K. Those are just nice little starter filters that help us. I'm going to add one more starter filter here. I'm going to type it on my own, essentially create a new line here, and then type country equals US. And that's just because of the kind of investing that I do. Obviously, if you were in a different country, you might do it differently. We have to add the word and again. All of these clauses are filters for again, reducing the number of stocks that we're looking at. Remember, just read this, if you're confused, read the sentence up here and then make sure that it all makes sense in English. Starting however many trading days ago, which is usually 0, starting now, show me the symbols that meet the following criteria. Type is stock and the country is US and the volume is the average volume is greater than 40K. And now we're going to do and RSI, and again with the parameter 14, is greater than 40. And that implied in that is that's today's RSI value is greater than 40. And another final clause here, yesterday's max for the past 3 days, RSI 14. Notice as I type it, it makes suggestions that tries to help me. Was less than 30. Whoops, we wanted to use 30, didn't we? 30, there we go. So today's RSI 14 is greater than 30. However, for the past 3 days before that, the RSI was less than 30. That's what the scan says. I know it's a little kind of technical, but that's what it says. So the first thing I'm going to do is check syntax, make sure everything's right. Yes, I got a green result from that. And now I can run my scan. So let's run it right now. See what results we get back. Here we go. I got back, in this case, 9 results. So out of the over 100,000 stocks in our scan engine database now, 9 of them match this particular criteria. And that's actually nice. That's a nice number. You're looking for scans that return anywhere from, 2 or 3 up to maybe 20, 30 stocks. It just has to do with how many charts you want to physically go through and look at. But if there's more or less, then you might have to make some adjustments to your scan, but that's actually a really good number. What I'm going to do now, I've done this in the past. You can see more about this in some other deep dives. I'm going to store these results in a chart list so that I can look at them in more detail. They're now stored in a chart list and they are part of my account. And I can look at them in a bunch of views. This is summary view, but the view that I'm most interested in when I initially run a scan is what I call candle glance view, the mini charts. The first thing I'm interested in doing is making absolutely sure that these charts meet the criteria that I specified. So what I'm going to do initially is I'm going to add the RSI indicator to these charts and hit go. And now I'm just going to quickly eyeball to make sure all of these stocks have recently moved above 30 after being below 30 for a length of time. And yeah, they all look like they have. So the reason I'm doing this is I want to make absolutely sure that what I thought I was telling the scan engine to give me is actually what I got back. And so by adding the RSI to the candle glance and then just visually looking at it real quick, I can validate that yes, the scan engine is finding me the stocks that I want. All right, so now I can look at this in a couple of different ways. I'm now going to switch from candle glance view, I'm going to switch to what we call 10 per page view. And 10 per page view is where I get to see the full chart for each of these. And in addition, I can hover over the chart and a little trash can appears and I can make my decisions as to whether or not I want to keep this particular stock or get rid of this particular stock. And so I'm gonna actually show you how you can get these settings and why I have the settings that I have here. I'm just gonna quickly look at this, however, and maybe this will let me narrow down if I'm willing to invest in a stock. So for instance, here's a stock where it's been going down for quite some time, the month of December. I don't even know, yeah, so this is Knoll Incorporated. And that looks pretty dire, frankly. Still, I would say the turnaround is not something that I'm necessarily willing to invest in myself personally yet. I'm going to be looking for a little more evidence that things are moving higher before I'm willing to pull the trigger in that particular case. Maybe something like this, where we've had a little bit of an exhaustion and then we're recovering and now we're starting to push above. That has potential. Again, I might need to know a little more. So on and so forth. So the point is that I now have my microscope out, and I only have to look at the 9 stocks that were returned in my scan, spend some time studying them, maybe bring some more indicators into the mix, and make final decisions as to whether I want to keep it or not. So that was, again, just a quick kind of overview of the process of scanning. It was showing you how, using a very simple setup, I can take that setup and turn it into a scan, run that scan, and in this case, I got back 9 stocks that are worth my time to investigate further. I still may not pull the trigger on any of them, but it's much, much better than having to look at 100,000 stocks every day. So at this point, I'm going to ask Rachel, do we have any questions that have come in, Rach? I've been going nonstop.
Excuse me. Yeah. Bernie's asking, and I think this was for your first scan, why did you use greater than as opposed to X?
So I'm going to talk about X in just a minute, which is crosses above. Crosses above is a situation where 2 lines, you want to compare 2 lines. And I could have used X, but in this particular case, it was kind of already happening because I was also having to test for it being below 30 the previous days. If I wasn't doing the test of making sure it was below 30 for the previous 3 days, then, and I just wanted to see, had it crossed right then, X would have been the right thing to use. I'll show everybody X here in just a minute.
I'm so sorry, I have a little cough. And there are no more questions, but I just wanted to point out that I did put in the chat a link to the slides. So if you are looking for that, it's right there.
Great, thank you very much. I got another link coming up here in just a second that you might want to put in there too. Okay, so now let's kind of broaden the topic here. I've given you a very specific example as an illustration, but let's make it more broad. This might be the most important slide of today. It's a recipe, an approach for finding useful technical setups customized for you, and it builds on a phenomenon that I think we all experience, maybe on a daily basis, certainly on a weekly or monthly basis, which is you look at a chart and you go, darn it, why didn't I buy that stock back when it was really low? Now it's really high and I've missed the move, and drat, I really wanted to get in on that stock before that big, huge move upwards. And we've all seen that a long time ago. One of the standard charts that I would talk about in this case would be Facebook. But there are many, many other ones that have become like 2-baggers or 3-baggers or whatever, and you're going, darn it. So we're going to build on that. When you find a stock or when you see a chart of a stock where you kind of wish you had bought it, but you failed to pull the trigger, or you failed to find the stock before it moved significantly higher, that's okay. You can use that as a tool for helping you develop a setup around that stock or helping you revise existing setups. So my recommendation there is when you find something like that, a stock you wish you'd bought, pull up its daily chart, because daily is really a great way to do this, and look for crossover signals, some technical indicator crossing above or below some level or crossing some other technical indicator. Look for crossover signals that happened just after the quote unquote perfect time to buy. And so it's important again to remember there's no technical signal that's going to tell you exactly when the bottom is. So don't go hunting for crossover signals or other kinds of things right at the bottom. Any signal that happened at the exact bottom is probably a coincidence. You're going to be looking for signals that happen 2 to 3, 4 days afterwards, or 4 periods afterwards. And I'll show you an example of that in just a second. So it's right after that is what you want to be looking at. Once you think you found some signals that look interesting, and I'll talk more about how you can find them in a second, then you're going to take those signals and build a scan from them. And then you're going to scan for stocks in the past, say 120 days out or 60 days out or 30 days out. And you're going to see for the stocks that the scan caught or would have caught, say 60 days ago, how did they turn out? Did they actually move higher like you were hoping? Or did most of them turn around and continue down, so on and so forth? So you can actually, that's how you can test and validate this, the scan and the setup that you think you might have found associated with that great stock, and see if it actually works for other stocks. Does that make sense? I hope that makes sense. You're going to examine those results in candle glance view like I was showing you, and basically study what happened right after the signal occurred. So I'm going to we'll go through this in more detail here in just a second, but there are a couple other things I want to put into your brain first. In order to do this, obviously, a big prerequisite for being able to do this effectively is to become more familiar with the technical indicators that are available and that are out there. There are way too many for you to study. Here are some good ones to start with, and they're good not only because they're very popular, common, well-explained, relatively easy to understand. I also like them because most of them are extremely visual. But they're also independent of each other. They don't tell you the same thing. And that's important too. If you're building up signals, but all of your indicators are basically are just different ways to calculate the same information, then you're going to get a lot of signals telling you to buy, but essentially they're all telling you the same thing. So you need to make sure that your indicators are in kind of different categories, so they're not all telling you the same thing. Here are some of the categories to consider: momentum, trend, and volume. And then I have another category at the bottom, which is basically something that gives you a really clear signal. Momentum is the concept or the idea that when a stock is moving in a particular direction, it tends to continue moving in that same direction. That's not always true, obviously. And something like news or some kind of big event can clearly have a big impact on a stock price, and momentum will have nothing to say about that. So momentum is something that when a stock is generally just trending higher for no specific reason, just general reasons, momentum is very, very good at identifying those situations. And frankly, those are the kinds of trends that technical investors can ride fairly effectively. The most common momentum indicator is probably the MACD, M-A-C-D indicator. It also has a cousin called the PMO, and then Decision Point created another cousin called the PMO. So that's what I meant when I said you can often have several indicators telling you the same thing. In this demonstration, I'm staying with the grandfather of them all, the MACD. When you're looking at trend, a really great indicator is another one of Wilder's indicators called the ADX system or the directional system. It has 3 lines. We can actually see, here's the MACD here. I mentioned it, I just want to show it to you. It goes up and down. It has a red line between it and the black MACD line. The histogram bars here show the difference between the red line and the black line centered on 0. And so you can use the histogram to see when the red line and the black line cross. When the red line and the black line cross, then the histogram is going to move from above to below 0 or vice versa. So this is showing momentum. The one below it is the ADX, and that shows trend. And it shows, obviously humans can spot trends just by looking at the chart, but computer spotting trends is a little harder, and the ADX can help the scan engine to really understand trends. When the black line is really high, it means the stock is trending strongly. And when the black line is low, it means the stock is kind of directionless. When the stock is trending higher, then you look at the red line and the green line. The red line, if that's up, that means that the stock is actually trending down. And if the green line's up, that means that the stock is trending up. So plus DI is down plus DI is up and minus DI is down. And the strength of the trend is what the black ADX line shows. You can get, if you spend a little bit of time kind of comparing these lines to the actual price action, you can get a good sense of how that works. And we can use that in our scans to help the scan engine pick stocks that are just in a trend. Another one, volume, is the Chaikin money flow. Here it is, and it's another oscillator that goes above and below zero. It looks at price and volume combined. It's a really great indicator, and so I use that often. Finally, I look for signals, for indicators that give clear signals, and there are two that I'm showing on this chart. The first are these dots. This is called the parabolic SAR, yet another Wells-Wilder indicator that is either above the price bars or below the price bars. It stands for, SAR stands for stop and reverse, and it's an attempt to calculate what a good stop price would be if you were invested in this stock. And the most important thing, though, is are the dots below the bars or are the dots above the bars? And when they switch from being below to being above, that's a signal. That's a parabolic SAR signal. It's a very, very clear signal, and it's pretty visual. And so again, studying this and getting a sense of this would help you. So now, what I want to, now that I've introduced you very quickly to those indicators, I want to show you how we could tie them all together into a setup. As part of that setup, we want to make sure we have a chart so that we can see all of these indicators all at once. I'm going to call this particular style my Scan Explorer style. In other words, it contains all of the indicators that are part of my scan, and it allows me to quickly see the scan results. And my recommendation is when you find a set of indicators that you like and that you're testing as a setup, go ahead and make those your default chart style so that all of your charts will come up with those particular settings. Those settings I just showed you, by the way, and here we go, we'll put this in the chat window. I've got available for you. You can simply just type in this URL. You have to make sure you get the letters, the upper and lowercase letters properly. But if you type that in, stockcharts.co or scharts.co/199M8F2, then you will get the chart I just showed you. And you can then save that away as a style for yourself. So what are we looking for? Let's go back to the recipe I just mentioned. Hopefully you already know this. Apple has been a very strong stock for a very long time. This is the kind of stock that's really, really interesting. And it's been up, even just going back a little ways, it's been up 84% since June of last year. And so, wow, why haven't, hopefully you have, but let's say we haven't invested in that. So if not, what did we miss? What technical signals did we miss? What technical signals can we find around this? And so let's expand out, take my Chart Explorer style and apply it to Apple, and then look back here around the time in June. June was the low, and let's say that was the low we were most interested in studying. Right around June 1st was the actual low. Again, finding signals at that exact moment would probably just be luck. But let's look at the days after that, the days and weeks after June 1st, and see if there are any signals that we could profit from and learn from. And the fact of the matter is there are a ton. The parabolic SAR went from being above the price bars to below the price bars. As I show you there, the MACD moved from below zero to above zero. The MACD histogram moved from below zero to above zero, which is another way of saying the red and the black lines crossed. The ADX line, the green line moved above the red line, meaning that we shifted from being in a downtrend to being in an uptrend. Notice that happened a couple of days after the low. And then the Chaikin money flow also turned over. But this is interesting. It turned over in the other direction. It had been primarily positive, and then it turned over to being primarily negative soon after that low. So that's a little counterintuitive, but hey, it happened, so let's explore that. Notice another thing about these arrows. They're happening in a little later. Each one's a little later than the previous one. That means that they're kind of confirming each other, and you're kind of spending a little bit of time. You're being a little more cautious. This one might have been a little too quick to make a firm decision on. This one happened a little later. This is a little later. This is a little later. So they're confirming each other. And then there's one final signal that I want to point out. It's right here, where the two moving averages, these are EMAs, exponential moving averages, they crossed right here. Now this is, again, several days, if not several weeks after the low, but this is a really nice set of confirming signals that are happening as that low occurred. So what can we use? Let's say we're interested in exploring those signals to see if those same signals have or give us good results for other stocks. Is this something that just was a quirk for Apple, or is this something that we can actually build a setup from and then find other stocks that are in similar situations? So taking all of that information and turning it into a scan is done this way. We're going to start with 3 lines, which are our global filters. You saw these lines before. They were in the scan I did a minute ago. These are just simply doing big narrowing down of situations that I'm interested in in my particular investing. So I'm only interested in stocks. I'm only interested in U.S. stocks, and I want to make sure they have at least a little bit of volume to them. Those are my criteria, and they're global. So pretty much all my scans will start with those 3 things. The next section is really the interesting section. This is what's built from the signals that I was showing you with the yellow arrows. So we see the parabolic SAR has moved below the low. The MACD histogram is above 0. Plus DI is above minus DI. And the Chaikin money flow is below 0. Again, that's that paradoxical signal that's there. So these are conditions that have to happen, the yellow arrows. The final piece of the puzzle is what we call the trigger. And the trigger is what happened today to kind of break the camel's back and make me very interested in these particular stocks. And in this case, as you saw, if we wanted to consider all those signals, the final signal at that time was the EMA crossover. And so here's where I'm using the X, like the questioner was asking about. I'm using the X here to say, today, the EMA 50 line crossed above the EMA 200 line. So the shorter, faster moving average has moved up above the slower moving average. That's a buy signal, and that's going to be my trigger for this particular scan. So that is how I would take the visualness that we saw a minute ago associated with that low that Apple had that we missed on, but now that we're studying, and turn it into a scan. So let's actually see what happens with that scan. I'm going to go back to the scan engine. Again, an easy way to get there is to go to your dashboard. And you could click here if you want, but I've actually already saved this as the Apple Breakout Setup Scan. And so I'm going to click Edit Scan, and we can see this. Here's that same scan loaded up into the scan engine. Actually, let me just make it just a little bigger too. Okay. And I'm now going to run that scan right now and see what results. So I've already typed it all in. This is exactly what we just went over a second ago. I'm going to hit Run Scan. And in this case, we get back 1 stock. And that's interesting. It's not unusual. That's the scan that I just created for you guys. It has a lot of clauses. It has 6 or 7 clauses in it. And the more clauses that a scan has, then the more likely you're going to have a very small number of results, because it's harder and harder for a stock to meet all the criteria. And in this case, we did have 1, so we can look at that one and see if we're interested in it. In this particular case, wow, this is kind of a breakout situation. The stock was going sideways for quite a long time, and then this looks to be news or some other kind of big event that has caused a huge spike. Now, those are exciting for short-term traders, but they're not very exciting for longer-term traders because we can't predict news. Technical analysis can't really predict news. Again, I'd have to do some more research to see if this actually was news. But what I'm looking for is something where it's a little more of a curve, or it's been going down for a while and then kind of breaking a little higher. So this particular result isn't super thrilling for me. I'm going to go back though. But I can still experiment with my scan. That's actually, whoops, that's my old scan. Let me get my new scan back in here. Just because when I ran the scan today, I got one result, I still have a lot of work to do. I need to start playing with this box up here at the top. This is the starting box, the number of days ago. And in fact, starting today is kind of jumping the gun. As I mentioned at the beginning of this, I really want to put in something like 60 days ago, let's say, as an example. I haven't even tried this, frankly. I'm not sure. I hope I'll get some results. 60 days ago, okay, good. We got 5 results. That's a very nice number of results. Let me take those and put them into a chart list. And here we go. And I'm going to then be able to look at it. And I'm literally doing this for the first time. So you and I are going to see the results together. I would say CPX doesn't look like the kind of scenario that I'm interested in. Again, I want something that's kind of a turnaround scenario here. This is something else, so I'm going to delete that by clicking on the trash can. Something that might be a little more interesting in this case would be, let's go with the PBR-A. This one is a rising one, has been rising for a while. PBR-A looks a little different, and so maybe that's the one we want. This looks like it's very low, relatively low volume with lots of gaps. That's not the kind of stock I want to trade. I might keep that one too. So now we've quickly reduced the number to 3 from this original. Let's go back to 10 per page. Now we can study these in much more detail using that style that I was showing you with all of our indicators on it. So again, we're looking for a situation where a stock has been in a downtrend and is starting to move higher. And in fact, we're looking for that situation to have happened again 60 days ago. So this is 60 days ago. I believe August of last year is when the 60-day thing happened. The question is, okay, we had our signals occur. Here's the MACD crossover signal. Yeah, I think right around here was when, let's see, or maybe it was even back here. It's when the EMAs crossed over. The question is, what happened to the stock since then? And in this case, the stock went sideways. In this case, however, here's a stock where the signal, when it happened over here, the stock moved higher, and that's nice. It would have been nice to be involved in this particular stock at that time. So maybe that's an example, kind of showing. What we're doing here is essentially visually backtesting this scan. And what we can see here is that those signals came together at a time that was very nice for this stock. I would say the same thing happened in this case. PBR-A has been moving higher since that happened for the past 60 days. So on and so forth. So we can experiment with our scan, like I said, in a couple of ways. Another experiment we could do, I mentioned moving it back, and you could move it back 120 days, you can move it back 30 days, and just see how it would have done had you run the scan that long ago. But another experiment we can do is we can remove some of these criteria. I'm going to go back to a 0-day and look at the current stuff. But I'm going to remove this final criteria because this was always suspect to me, the CMF 20 being lower than 0. That was always a little suspect to me. I'm going to take that out and see if that makes any changes. When I run my scan now, I get back 8 results. In fact, some of these results look really good. Let's take some time, put those in a chart list. Here's that chart list. Go look at it in candle glance. And yes, we do see the beginnings of some stocks. Again, we see our MTL stock, and that still looks like news to me. But we see some other stocks, say this one, that have had this kind of big drop and are now starting to move higher. We can see that because of the moving average cross. I go from candle glance back to 10 per page, start to study these. I'm looking for, yes, situations, maybe a situation like this where things are moving higher, so on and so forth. Anyway, so but the point there being is that don't the setup that I came up with initially is a starting point, and I can play with it. I can tweak it. I can play with the scan when it's run. I can back test it visually. I can change the criteria some, add additional criteria if I have too many results, remove some criteria if I have too few, so on and so forth. So, Rachel, were there any other questions that came out of that demo?
Yes, there were. Let's see here. The latest one is from John. When reviewing scan results, how do I look at several timeframes at once?
Okay, great question. Thank you very much for that. There are a couple of different ways to do it. Remember, scan results, the best way to, when you get scan results and you don't have a zillion of them, the first thing I always do is put them into a chart list. Your chart list is, if you're an extra member and you have scanning capability, you have 250 of these chart lists. So you should have a bunch available to you. And scan results, you'll probably have several of them that are dedicated to scan results. The first thing you'll do is validate that the results you got are the results you expect by making sure that the crossovers are happening like you specified them in your scan. But then you're going to start to use either 10 per page or even just the SharpCharts workbench itself. Here's the workbench. And you're going to decide, do I want to keep this one or do I want to get rid of it? Do I want to delete it and move on? After you've narrowed it down to stocks that you're sure or stocks you're interested in, then you can go to the workbench and change it from daily to weekly to monthly, so on and so forth. Or you can go back to your list and view your list in what we call gallery view. There's several ways to do the answer to the question. But this may be the most interesting way, frankly. In gallery view, which you can customize if you want, you take a ticker symbol, and then this ticker symbol is displayed to you in several different time frames. We have an intraday view, we have a daily view here, and we have weekly view. Finally, and one of my favorites, it's a subject of a completely different deep dive, is we also include a point and figure view, which I think it should always be looked at. Gives you a very good filtered long-term perspective on a stock. That's for another time. But this gallery view is a great way to see kind of the really short term, the intermediate term, and the long-term view of any particular stock. And as I mentioned, you can also take these views and you can customize them. That also is a subject of a different deep dive. There is information in our help areas about how to customize gallery view.
Okay, and I had another question. In one of your scans, you did EMA crosses over EMA 200, or EMA 50 crosses over EMA 20. How do you do a cross under?
So the X operator was what I used to do the crossover. And if you think, the X operator is actually just a quick little, it's kind of a hack. It's kind of a shortcut. Underneath the covers, when you use an X operator, it breaks your expression into two expressions. The first is that in this case, the EMA 50 is greater than the EMA 200 today, and the EMA 50 was less than the EMA 200 yesterday. So those two criteria is what makes up a crossover, and when you use the X operator, it kind of condenses those two lines down to a single line, makes life a lot easier, makes our scans a little more readable. Now, but if you understand what's happening behind the scenes, then it makes it very easy to take that same operator and create a crosses below situation. You don't need a new operator. We don't have like a Y operator or something like that. Instead, all you do is you take the two expressions that you had for the crosses above, and you just reverse their position. So in this case, we had 50 or EMA 50 X EMA 200. So that was the 50-day crossing above the 200-day. If we wanted the 50 to be crossing below the 200, what we really are saying is we want the 200 to be crossing above the 50. Does that? I hope that makes sense.
I think it does.
So you literally just simply reverse the position of the two indicators and put the one that was on the left on the right and vice versa, and that has converted what was a crosses above to be a crosses below situation.
Okay.
I hope that makes sense.
I think it did, but okay. And then we have another question from John. does the double backslash take out the line from the scan?
That's a great question, and I apologize. I meant to explain that. Yes, the double backslash turns everything on that line into a comment, meaning that the scan engine avoids it. In fact, let me show that real quick. I'm going to pull that back up. I go back to my dashboard. I go back to my scan, and I edit it. Okay, so here's my scan with nothing crossed out because I've left it all on. But one of the really nice things about putting all of your scan elements one per line, as I've done here, is you can then use the double backslash to comment out that particular line, to essentially turn off that clause. And that's, I demonstrated that earlier. Hopefully you picked up on it. And you can then continue. You could turn this one off and you could turn that one off. For instance, and run your scan in that particular way. Now, if you have written a scan and you've put it all on a single line or on a bunch of different lines, and it's not quite so easy to turn clauses on and off like I'm showing, you can always hit the reformat button down here. See this little reformat button? That will automatically turn your scan, take your scan, no matter what it looked like before, and turn it into this one clause per line, generally starting with the word and, nice and neat. And then you have, first off, it's easier for you to kind of organize your thoughts, to be honest with you. And then second off, you can do this little trick that I'm showing where you can do the slash to comment out a particular line. So I hope that helps.
I think it does.
Again, I know there's another deep dive I did about a month ago about scanning and all the different capabilities that are there. I'm glossing over some of that in this one because I want to talk about the bigger concept of generating a setup, making sure that setup works for you, and then tweaking it. It's like riding a bike, I guess. You have to just do it a couple of times, and then eventually you get it, and then eventually it all becomes natural. And the goal is to feel, again, much more comfortable just playing with these scans, tweaking these scans, turning these scans into something that's very, very useful for you.
Okay, and then do you want to spend a little time talking about scan.stockcharts.com?
Okay, I can absolutely do that. So writing scans, we realize, is not necessarily completely intuitive. We wish we could make it extremely intuitive, Dear Siri, please write me this scan. Working on that. But you really do, it is worth taking time to understand scan syntax and really be able to tweak it effectively for what you really want to do, because scans can get technical, pun intended. We provide a lot of help online. We provide these kind of shows. We also provide a lot of written documentation, but we also realize that that's not entirely enough. And so we have fostered and created, and we support a user-to-user help environment called scan.stockcharts.com. And you can get there. It's a website, and it's a website, just to be clear, that is kind of independent of StockCharts. We want it to have its independence so that users can feel comfortable asking and answering questions up there. And there is a community of very, very positive users up there that are very, very good. Mm-hmm. And while the name is actually stands for the StockCharts Answer Network, and you can ask a question about any aspect of StockCharts. It can be any part of the website. Obviously, a lot of people really focus in on scanning because that's where a lot of the questions are. And so if you want somebody to try and write a scan for you, and you really don't have the time yourself, you can go to scan.stockcharts.com. You can ask the question there, and maybe somebody like Mark D, who's a really nice guy, a couple other people, can help you out. Now, we're getting down to the end of the wire, so I did want to, in the aspect of help, I wanted to mention some more things here that you can do if you need any information. And with that, it's already been an hour. So hopefully this has been very helpful to you. Thank you very much for watching. I will see you next time on Deep Dive into StockCharts.